Okay, good morning. My name is Chris Showalter. I'm the CEO of Lifezone Metals. I'm excited to be here this morning with Crux. And Lifezone Metals, we are a hybrid company. We bring new sources of battery metals to the market through the Kabanga nickel project. But we're unique in a way where we're combining that with a technological capability called hydrometallurgy, where we're utilizing that to open up new sources of battery metals and do it in a clean processing methodology where we're able to identify new sources, but clean up the supply chain, which is one of the major requirements when you look around the world right now. It's a demand the mining sector has, consumers, manufacturers. So we like to view ourselves as really a solution provider to the industry to provide clean, green sources of battery metals by applying innovative hydrometallurgy. Yeah.
Chris, good to meet you. First time we met or spoken. I'm really keen to understand this story better. First of all, if you don't mind, because we haven't met or spoken before, can you give me a bit of background? What have you done before that's kind of relevant to what you're doing now?
Yeah, sure. So my background, I started out 10 years at Goldman Sachs, paid dues on Wall Street, but always had an interest to eventually do something in Africa. Studied there as a student and decided after the economic crisis to take a big career leap. Resigned from Wall Street and brought the family over to Zimbabwe in Africa. And that was really my first introduction to mining. That just happens to be what was going on in Zimbabwe as a predominant economic driver. Got into mining and really from there got introduced to the founders of Lifezone, Keith Liddell, who was really at that point, this was kind of 2013, 14, really breaking out on the first commercial application of Lifezone's hydrometallurgy, and they were doing that in South Africa, and this was very much focused on PGMs. So had a chance to meet Keith. We actually were looking at Zimbabwe early on as a potential host country for some of our first projects, and really, I think like a good investment banker, you eventually find a company that you get that glint in your eye. You really love the story. And for me, it was coming on board in 2017 as a CEO to really drive the commercialization of Lifezone. And all the hard work had been done, 10, 15 years of research and development, all the hard piloting, pretty much everything. So really it was that kind of inflection point where it was an exciting time to join. And really we've been taking off since then.
Right. So you said the word hybrid earlier. It's just dual track opportunity here. But what's the reality? You started with PGMs, and now we're Kabanga and nickel, and then you've got this hydromet technology, which I think people bandy that word around a lot. Yours is proprietary, and I kind of understand both those things. So should we talk about what you walked into day one? What was the brief back in 2000? Did you say 17?
2017, I came in full time, yeah.
Yeah, so what was the brief to you then?
Yeah, so 2017, so really Lifezone at that point in time had focused on a PGM project in South Africa, and the direction PGMs were going, PGM prices were challenged. South Africa had increasing country risk challenges, and so that's the project that we had developed. All the intellectual property, all the know-how was really driven around that one fundamental project. But as we look to commercialize the business and expand the opportunity set, and that was really a fundamental reality where, okay, we've kind of nailed hydromet on this one project, but geez, look at all the other applications we can start attacking in industry, and this will be able to really start deconstructing some of these dirty smelting operations that were really at the time we were kind of coming public with our technology. The ESG momentum was really just heating up. So for us, it was a very advantageous timing where we were bringing a clean processing alternative to smelting right when companies and the entire world was saying, hey, we really need to start focusing on cleaning up the supply chain for the mining industry because battery metals, electric revolution was coming into full force. And so the CO2 implications of mining lots more metal, unearthing all these new deposits to drive the growth required, we kind of hit that at a very strong time. So we then started looking at other projects. Tanzania came across that for us. We were up there in 2019 initially, and what we identified was really what our competitive advantage is, which is we either look for chemically complex ore bodies that maybe can't go into a smelter. They have things in there that if you burn them up in a smelter, they're going to cause a fire, high levels of chromite, other nasty chemicals. Or we look for logistically, geographically constrained projects that maybe it's exorbitantly expensive to get an ore or a concentrate to some part of the world elsewhere, and the cost involved. So Kabanga for us, it was geographically constrained, but it was very high grade, and we loved the project when we started digging into it. We saw that as really a great project for Lifezone to own ourselves and then demonstrate our capability and really take full ownership of a mine to final refined metal project.
When did you pick that up?
So really, we signed the deal with the government in January of 2021, and that was really the kickoff. That was signing the definitive framework agreement. We received the mining license in end of that year, and that's when we really took full ownership of the project, and we started a process to look at potential partners and investors that would come in. And we ran a pretty competitive process, and that's when we started negotiating in real detail with BHP, and that's when that part of the relationship was triggered. Yeah.
Okay, so that project's been around since the 1970s. Obviously,
Really?
Challenged. How much work did you do before you signed the deal with the government in 2021 to understand what the opportunity was, and even if you could do something with it?
Yeah, so the process for us was really getting in there, doing our own extensive due diligence, visiting the site, developing flow sheets that were applicable, getting as much information as we could on the mineralogy, and designing a hydromet flow sheet that we think would be conducive to that specific project. And yeah, we had a high degree of confidence. The ore body at Kabanga, it's very nice. It's very compatible to a hydromet process. I mean, it doesn't have a lot of deleterious materials, easily floatable, high grade. We got a nice high grade concentrate directly in from the mining operation into the refinery complex, which will be in Kahama in the center of the country. So yeah, so it ticked all the boxes, and I think the reality of grade just driving the inherent value of a project like that, it just supports the economics overall.
Right, and what have people tried before in terms of developing this project or looking to develop this project? And why does your looking at these dual track opportunities, revenue opportunities, what does your hydromet do what others couldn't?
Yeah, there are a few factors, and again, a lot of this comes down to timing. Like, we were really fortunate with our timing in the project. Historically, this project, as you said, discovered in the 1970s, UN Development Program. It's been in a number of different mining companies' hands over time, but it was always really remote, geographically constrained. Infrastructure was limited, power was limited, so all the traditional things that you need to really underline and unlock a project like Kabanga didn't exist. So, and the challenge was the last owners, Glencore and Barrick, they needed to. Glencore was the manager of the project, and so Glencore's plan was to take this heavy bulk concentrate from the extreme western portion of the country, get that all the way to the port in Dar es Salaam. So you need to get the infrastructure in place to transport it, send that all the way over to Sudbury, Ontario, throw it into their smelters there, produce a mat, and then send it over to Norway where their refinery is. So you look at that comprehensive journey, and that really, because the Kabanga project was in their hands for so long and it had to fit into their operational footprint, we come in and we say, okay, we're going to liberate the economic model here. We're going to produce concentrate to final refined metal in country, remove all those logistical and geographic constraints. And so we kind of turned the business model upside down. And that's one of our key competitive advantages is localized processing. And then the other big factor was that the government of Tanzania had embarked on a very large commitment to infrastructure development 5 years prior to us coming in. There's a brand new hydroelectric dam in the northwest of the country that'll give us the access to the updated grid in 70 kilometers away. So power, big one. We don't require all the infrastructure that limited the project historically. And the government's also halfway through building a brand new standard gauge railway system across the country. So upgrade rail, power, all there. The Tanzanian government has committed to. That is a big enabling factor for the project. And then just the business model we apply that removes the constraints and costs and the CO2 implications in addition to moving raw materials around the world. And that's That's not where the world's going right now. I mean, empowering a host government to beneficiate their own sovereign metal is a very, very powerful business model to pitch.
Yeah, yeah. I think that's Elon Musk's famous quote, isn't it? About making sure that those particles aren't moving around the world. Just on the hydromet, the technology bit. So it's conversation because they're inextricably intertwined in the sense that your technology unlocks the potential and the economics for this project. So as I alluded to earlier, hydromet is an oft used phrase, and many people use it in a variety of different ways. You've kind of created your own flow sheet, therefore it's proprietary to you. What exactly does yours do that others don't?
Yeah, I think you're right. I mean, hydromet can have a very broad interpretation. I mean, even the use of cyanide can be used, can be referenced as hydromet. And hydromet's widely utilized in Indonesia, but it's a very dirty methodology. So hydromet, the flow sheets we design are all bespoke to the project that we're evaluating or working on. So every single flow sheet we would look to design, depends on the project. So right now we have just over 100 global patents, and the bulk of those patents, there's about 6 different families. The bulk of those patents relate to precious metals, so gold, and then PGMs, and that's where the core expertise and know-how was developed. And that was really the founders, Keith Liddell and Mike Adams. Really, their history in the PGM sector in South Africa. What they were attempting to do was identify an alternative process to the subservience of what was really the big 4 refiners in South Africa. In South Africa, you have the big players that do all the refining and smelting, and then you have a whole bunch of small junior miners underneath there that all have to send their material to the larger players. And so the payability, you're a price taker in that environment. And so they were looking to develop something that would empower a smaller junior miner that was cost effective and would liberate them from the payabilities to the majors. And that's essentially the economic rationale that drove the initial flow sheets. And then what we've been able to do is really start applying those to not only precious metals, but then also looking at the Kabanga project, where we said, okay, now we're in a position as we commercialize, we can look at different ore bodies, different projects, and there's a whole bunch of different metals and minerals we can apply this to. So it's all part of the expanding commercialization of the opportunity set.
Okay, so what I'm trying to work out is how do I value the company, right? So you kind of got a large nickel asset, good grades, really good grades. You've got a technology, but it sounds to me like this technology is right for this project. And if you were to take this technology somewhere else, you'd have to, do you start again, or do you kind of tweak it? In which case, if it's the former, it's the team that seemed to be the value there. The people who've done it with PGMs, the people who are doing it with nickel. What is it? How do I value it?
Yeah, it's an interesting way to ask that question. I think the team, absolutely. I mean, I think the expertise we have, and also combining, we acquired Simulus Engineers about a year and a half ago, and that was really the largest independent hydromet group out there, and we had been using them as a partner for quite a long time. And so what we've done is, by combining Lifezone's partners with Simulus, we've basically aggregated what we think is, really the crack team of hydrometallurgical experts globally. And so we think we have the ability to use that expertise, that innovative intellectual, potential to really crack a whole bunch of challenges that exist for projects that haven't been able to unlock kind of that latent potential. And sometimes that comes down to just being unsmeltable. So there is a customization to everything we look at. You asked about like where the business value is in Lifezone. So we obviously have our flagship project, the Kabanga Nickel project. I mean, that's an enormously high grade, very valuable project. So we have the ownerships in the assets, and then so the bulk of the valuation attributable to Lifezone right now is going to be in the Kabanga Nickel project. Now we have a joint venture with Glencore as well in the United States, where we're going to be processing catalytic converters, and so that's underway as well. So what we have is 2 of the largest mining companies in the world as partners as we commercialize our technology. Very, very huge endorsement for our process. And then we, for providing these flow sheets, designs, and engineering, we get a royalty on the project. So, for instance, Kabanga, we'll have a royalty for that technological application and for everything we do for the project. And so we collect royalties per project. That's one of the revenue streams. And then we also have the asset ownership in the Kabanga project and in partnership with Glencore. So we could pursue two different models. We can continue to acquire our own projects, or we can emerge into a more asset light service provider, providing these packaged design solutions using our hydrometallurgical team's expertise, and do that on a multitude of projects. And so really, when we look at going forward, we're going to have a pipeline of projects around the world, and we will be designing, engineering, and setting up hydromet processing as part of that. And that comes for a royalty. And so that really is our, when you look at our addressable upside as a company, it's going to be the fees we continually collect. And the more solutions we provide, the more revenue we generate.
Got it. Okay, so if you're done, I'm going to drill down there. With the major partner that you've got in the shape of BHP, can you tell me precisely who does what, what the expectations are, and how the economics get divided up? Because I think there's a conversation here about how focus, revenue, and then kind of taking advantage of reputation, experience, etc. on future asset development. So what was the BHP deal look like?
Yeah, so they came in, so they invested $100 million about a year and a half ago into Lifezone, and so $90 million went into the Kabanga subsidiary we have, and then $10 million directly into Lifezone, and that was for 17% of the Kabanga project. And as part of that commercial agreement, we with BHP have an investment option agreement that gives them the pathway to go from 17 to 60%. So we have a very formulaic design as part of that, where that is going to be an option that's triggered on the publishing and delivery of the DFS to BHP. That then starts a process where they evaluate. Then they would trigger their option if they move forward, and they would have a formula where they would be able to go from 17 to 60% at a 0.7 PNAV multiple based on the valuation from the DFS, which has to go to 3 different valuers. So investors can do the numbers. We are in the process of concluding the DFS right now, so that is something that is coming very soon, and that is something that will be the really the trigger for the next stage of BHP's involvement in the project.
Same meaning what? Which quarter are we aiming for?
Yeah, I mean, we've been targeting towards Q3, Q4 this year, so we're right in the mix of it right now.
Okay. Okay. Interesting. And that will give the company the sense of the economics with regards to Kabanga, the deal with BHP. Sometimes those things need to be translated for the markets into what does that actually mean for Lifezone, the company. You and the board will have talked about what your expectations are and how you would value that. So how should we view that deal, and how should we value the company when that comes out?
Well, I think when we talk to investors, what we like to highlight in terms of value in Lifezone is, number one, the market really just attributes value for the Kabanga project. We don't really get, I think, value for the technology as of yet. So there's upside once we're demonstrating the market. Once we are building the first autocat recycling plants with Glencore, once we're kind of in the market, we'll get more fair attributable value for the technology itself. So there's a discount, I think, in the price of the stock because the technology is really not in there. When you look at where nickel prices were when BHP invested, they're down substantially. So we're at the bottom of the cycle right now in nickel prices. We talk about that as well. But I think what that does is that puts, as a stock, I think BHP invested around $10, and right now we're trading around $7. So there's a material discount right now for investors. Before BHP comes in and decides on their option, there's the ability to kind of get in at a discount to BHP's even first tranche. So investors can look at that and evaluate what is the likelihood of BHP coming in. Do we have faith and confidence in management being able to deliver fundable pathway for this project. And I think if investors look at uh, the announcements we've made over the past, really 4 months, we've come out and we've said we have signed an engagement letter with the United States Development Finance Corporation for both political risk insurance to underwrite the project. So that's a massive de-risking for our project. And so the equity investment, you can take a view on how much you would value that. Number two, bringing the U.S. Development Finance Corporation in as a project finance partner. We announced a project finance pathway. And then we also announced that we have an MOU with JOGMEC in Japan. So that is part of this, the strengthening of this mineral security partnership. And so when you look at value of Lifezone, we have started to articulate to the market a funding pathway, including multiple new, very strategic stakeholders. BHP coming back in Africa for the first time, coming into the Kabanga project, huge endorsement, bringing in the US government as a partner, potentially bringing in the Japanese government through JOGMEC and partners JOGMEC would pull in. So I think I think investors can read those announcements and they can take a very educated view of the path we're going towards a fully funded project.
Okay, Chris, I mean, you got obviously all of these big investors, but is there more to it? Who's sitting in the background and what does your register look like?
Yeah, so when we came public on the NYSE July of last year, so 2023, we did a PIPE placement as well as part of our listing. And so we brought in names, so BlackRock, obviously big heavyweight in the mining industry, Synctive, who's based out of New York, who continues to be a very large supportive shareholder to date. And then we have Grantham Mayo out of Boston, who was a big anchor investor in the pipe. So I think we've had a committed, really strong register, and we've had some energy kind of specialist funds like Kimmeridge that came in early. So, and that's reflective of when we listed, we had Go Green Investments, who come with very strong background in the energy space. John Dowd being a Fidelity fund manager for a very long time. So we really tapped into a lot of that area of expertise, and a lot of the investors did come from kind of that energy background. So a pretty unique path for us. But I think it's important to have committed, stable institutional investors. And I think what we would expect is when we do announce these catalysts and we get to the point where the DFS comes out, marketing agreement, BHP getting their investment option triggered, that will be another major milestone for the company, where we would ideally like to see more institutional investors come in, because I think a lot of people are looking to see those catalysts come, and that will be another box we've ticked. I mean, we've delivered on all the things we've said we were going to do over the past year and a half. The announcement of the updated resource statement, the joint venture with Glencore, and these three announcements coming in the near term will be a major, I think, catalyst for new institutional investors to kind of take the big step of coming in to the stock. So maybe I'm overly optimistic, but I think that's we've heard from a number of institutional investors that is the case.
Okay, and just if I may, with that, if they bought into Kabanga because that's first off the rank, and then we'll see what happens, or have they bought into your idea of this succession of projects which you can unlock value for using your technology?
Yeah, it's quite. There are two very different types of investors we have. Some look at us and just say, "You guys are the best nickel project in the world. You've got BHP. That's it, guys. I can do my numbers, and you're more than fairly valued just based on that." Some look at us as more of a technology company that has the underlying value of Kabanga, supporting our valuation. And the technology view for us and hydromet is that's kind of our big upside. I mean, that's where we demonstrate on the Kabanga project and autocats, then that's going to give additional confidence that the technology has really that big addressable market that we can then go and attack. And so the growth story really unfolds from there. So people look at us a few different ways, and then some look at us as a young emerging royalty company. So we get the technology royalty fees. You could look at us as kind of a royalty company that continues to get a pool of royalties that we can, you can benchmark us against some of the royalty or streamers. So a pretty interesting way. People can look at us three different ways.
Okay, so some pretty big names dropped there, and some very deep pockets with those partners as well. So
Mhm.
they've been through a process with you, and I'm trying to understand with through pilot plants, etc., to understand that the technology works. And I think in most cases, with certainly with Jokeback, I suspect in BHP, they're looking for that product, they're looking for that metal. That's the solution that you're providing for them.
Yeah.
With regards to Glencore, just finishing off on deal structures. Again, was that deal structure look like for you?
Yeah, so the Glencore structure, and what we like about this is Glencore, they've obviously made a very big commitment and they're very vocal about their recycling strategy and really to take advantage of, as they call it, kind of above ground mining. And really what we've seen from them is take a really, really strong view to focus on the recycling market. And what we've done is that's very compatible for us because we've been able to take the know-how in the PGM industry, as we said, as we commercialize, as we look to open up different opportunity sets and applications of our know-how. Recycling was one that we were very keen on, and so the PGM expertise we developed in South Africa and the flow sheets there are being really applied to the recycling market for autocatalytic converters, and that's a pretty amazing contrast when you look at the scenario of going and building say you want to go build a new platinum mine in South Africa, given the risk, the cost, PGM prices where they are, just call it $1 billion for a brand new state-of-the-art mine, versus we think the DFS with Glencore that we're working on right now in this 50-50 joint venture, these will be in the range of 25 to 30 million, most likely. And we would be doing the same amount of ounces from that recycling project as a brand new mine in South Africa. So the capital intensity comparison is pretty staggering. Now, these are thinner businesses. They're very established recycling networks. So it really comes down to what is our competitive advantage? And our competitive advantage there is going to be the speed of processing. Right now, the recycling industry in the U.S., there's a whole host of intermediaries, traders that go from collectors to aggregators to decanters to small furnaces to sending material overseas to the big boys in Europe to get refined. That can take anywhere from 3 to 5 months. So you have a really fragmented supply chain. And what we're looking to do is apply that kind of philosophy we've had even in Kabanga, where we break down that supply chain and we go from the monolith coming out of the autocat to final refined PGMs in one location. And you collapse a lot of the margin as a result. And that's something people haven't really been able to do. So with us and our expertise and our know-how, that's really the differentiator in that market. And I think what Glencore sees is Glencore can come in and bring their marketing capability. They've got a cost of capital that helps us compete when it comes to working capital facilities, and they have been looking for ways to get into the PGM market more aggressively, and this gives them a very low cost route. And this is clean, green processed metals in the U.S., compatible with the IRA, and we can demonstrate and say we are beneficiating and unlocking critical metals here domestically in the U.S. through new smart recycling, but doing it in a way that we can earn the ESG credentials for the jewelry companies like Tiffany's and Pandora that will actually pay a premium for that metal. So it's a really good business strategy. We've brought in someone to run this for us, Justin Froneman, who's got a tremendous amount of expertise in the business. And so, really excited about the path.
Okay. So lots to like in there, lots of boxes ticked for sure, and sort of kind of rootle around in the detail again. But if I bounce back to BHP and the deal structure there, they've got the potential of going from 17 to 60%. Great. Are you free carried through to production? What are your obligations? And if you need to raise money, what type of money to be able to raise through some of these partners and elsewhere?
Yeah, so there is a uniqueness to the capital structure that we've designed with BHP, in that so when we are able to disclose details of the DFS, we'll have a CapEx number. That CapEx number, obviously that'll lead to a valuation. The valuation that's given will attribute what the quantum will be that BHP has to subscribe to new shares, essentially. So they'll go from 17 to 60%. That that number will be a large portion of the equity contribution to the project in our view. And so if you combine that with the ability to do, say, a 50-50 equity debt now that we've announced project finance, that equity is getting, cut in half. And then the other nice sliver we have to work with is we've agreed with BHP that Lifezone controls 40% of the marketing rights. And that would be in the event that they exercise their option and go to 60%, they would have 60, we would have 40. So those marketing rights are very valuable. And we've announced to the market that we're in negotiations with potential off-takers. And we can use that offtake as a way to monetize and potentially fill that gap of any equity that would be left, that would be contributed by Lifezone. So we need to see how much BHP invests in the project based on our investment agreement. We need to balance that against okay, what is the project financing? How much is that going to bring in? And then I think we have a number that's very, very manageable for us to ideally be able to monetize the offtake to fill. So when investors look at Lifezone and our stock, they should see, okay, this is a pretty nice non-dilutive pathway to seeing a large CapEx project fully funded with the involvement of major stakeholders that are increasingly putting this on a pathway of, this is going to get built.
Okay, so I think BHP effectively endorsing the project and validating the project, you as I indicating a sort of maybe a small slither of equity requirement, and you get to play around with it. It's 50-50, 60-30, 70-30, whatever, 60-40, should I say 70-30. You get to play around with that once you know more. But so for the institutional boys and girls that you might go to for this equity slither, I know you say you got a big chunk from BHP. You feel that, as far as they're concerned, they'll view that, and you're an ex-banker, that's a de-risked project, and the cost of that money won't be punitive.
Yeah, I think what investors will look at is we're not on this highly dilutive capital pathway that you see in the large mining projects, where we are able to really stitch together the agreement with BHP, project financing, the ability to monetize offtake, and to show a potentially very minimally dilutive pathway to a fully financed mine being built is pretty unique. I think that's really one of the key attractiveness to our stock right now, is that we can minimize dilution on a very large CapEx project. We're not going to be coming back to the market over and over again as we hit different funding milestones.
And not a big build-out period, potentially, and near-term revenue. I suspect there's a lot of things to like in there. Let's sort of just talk about it, broaden it out a little bit to market, because we've kind of brought in BHP Global, we've got Jogback, the Japanese, we've got Glencore, again, global. They're buying, they are hook, line, and sinker invested into this thematic around battery metals. Obviously, nickel has the stainless steel component, but people look to what else it's growing markets for it. So, where would this project sit in terms of global supply? We've kind of got that whole Indonesia, Philippines, China triumvirate thing. This is a Western bound product, presumably.
Yeah, I think when you look at the announcements we've made in terms of the mineral security partnership, the U.S. government coming in, JOGMEC, we have clearly messaged to the market that we're very much within this MSP family, and that is directionally where we're going to be going. So I think the metals coming from the Kabanga nickel mine, that would be the more likely route for us right now. Yeah,
and presumably conditional loan funding from the U.S. as well.
Yeah, nothing conditional, but it's
really
it's a pretty strong correlation. But no, it's again we're in the process of getting all the financing and political risk insurance. It's a long process. So, but I think directionally that's where we are philosophically as well. I think.
Okay.
And the metal coming from Kabanga is more. It would be much more compatible with the Western markets because of the clean credentials. I mean, we're non-DRC cobalt. We are non-Indonesian nickel. You have the CO2 footprint of the Indonesian nickel miners. We know all too well, what's coming out of that nickel production, and we're going to be, somewhere between, we think 3 to 5 tons of CO2 per ton of nickel. And so with the Western markets and a lot of the self-imposed CO2 targets they have, a lot of some of the policy frameworks coming into play. I mean, we because we're heavily engaged in discussions with off-takers and the auto companies, we know right from their own mouth that they are struggling. They, given the option to get nickel from somewhere else outside of Indonesia, absolutely they would take it. Now, the challenge there is that the price competition to try to get EVs built affordably versus China right now, there's not a lot of support, or there's not a lot of ability to pay a green premium, because absolutely do we think our metal should demand a premium versus dirty Indonesian nickel? Yeah, and that's a natural evolution that should take place. We think it will come over time. We're not there yet. I think the auto manufacturers are still battling to get that, that competitiveness done. So they don't really have the luxury to be able to buy more expensive product for those ESG credentials. But that's where the market is evolving, and especially for the Western autos, and some much more aggressively than others.
Right. And whatever you think of that, what do you think of Trump's comments with regards to initiating tariffs against Chinese motor vehicle import?
We have to see what actually happens. I think a lot of the political commentary, we need to see what actually materializes in terms of, real policy that is going to be put into place. I think, I think it's the same kind of bifurcation we're seeing in this East versus West and in a lot of global markets. I mean, nickel's a great example. I mean, we have Indonesian nickel will continue to go primarily into the Chinese smelters, and there's a very strong conduit there. Given the opportunity to get nickel from somewhere else, I think you'd see a natural transition away. I mean, Tesla, they, in their annual statement, we highlight this a lot in discussions that, they say 30% of the CO2 in a Tesla is coming from the nickel in the cathode, in the battery. I mean, that's a problem. So if they really want to get that CO2 footprint down, nickel's the place they can get it the fastest, because it is a big contributor. So that's where a project like Kabanga is so well positioned to provide some of the cleanest non-Indonesian nickel and cobalt. And that's where we see ourselves in a very is a strong preferential position. And also being such a high grade project, that puts us in the first quartile in terms of cost of production. And that's where, the one thing Indonesia's done is they've done well. I mean, they've been able to take over the nickel market essentially. And you look at how some of the Canadian miners, some of the lower grade projects, specifically in Canada, I mean, those are tough to make work, given the inherently lower grade you see in Canada versus how fast they're able to strip rainforests and, dump these into these big HPAL processes and then smelt them and get them to China. I mean, it's not a great situation, but it's producing a lot of nickel.
It is at ever decreasing grades. It would appear as well, but you say it's a bear market.
We're starting to see quite a bit of that, yeah.
Yeah, and I think obviously the relationship with China obviously doesn't sit well with kind of Western governments, for sure. So we'll see what happens there. I've got to ask you about price though. Obviously, it's been fairly erratic. We had all the shenanigans of a year and a half ago with the LME. We've seen prices up at 20 at the beginning of the year, and this back down. I think it's around 16. It went as low as 15 and a half earlier in the week, and now it's at 16. Where do you think it's going to end up this at the end of this year?
I think when you look at nickel prices, we've bottomed out around this price level twice now over the past year or so, and so I think technically, do I listen to the reports where people talk about kind of a triple bottoming, and this is technically a great signal for upside? Maybe in the stocks. I don't know about commodities, but I think the most important driver here is really, again, Indonesia. I think Indonesia has done, they have the market share now. When you have market share, then you want those things to be profitable. So they've got 60-some% market share. They've built out, their nickel industry. Now they need that to be a profitable driver for the economy, and then that needs higher nickel prices. So I think we're tipping to the point where, the sound bites we've been hearing out of Indonesia is really, okay, we're there, we're the major player, but now these things need to be supported by pricing that is going to make sure these things can run. And so I think, we're sensing a little bit of a sentiment shift from the government there that, okay, now we need to focus on getting the nickel price up. How do we do that? You're starting to see them hold back some of the permittings a little bit more aggressively. You're seeing some of the some of the operations actually halt because of lack of war. They're importing from the Philippines. So you're seeing some dynamics there that should be supportive. But I think right now it's still, we still got to work through the part of the cycle we're at. I mean, we've had all the mines, that you've seen close in Western Australia. I mean, even our partner BHP has, made the tough decision on Nickel West. And these are the things that need to work through the supply demand over the coming years. So for Kabanga, where do you want to be when nickel prices are at this point? You want to be building a mine, and you want to be able to get into peak production when the supply demand curve is really corrected. And so we see that, coming in, years ahead. So we think we'll be in a strong position to really be getting into peak production when a lot of nickel forecasters have indicated they'll see nickel kind of getting back to those levels that you really need to see. So yeah, it's a good thing we're not selling nickel right now, I guess.
Yeah, it's kind of interesting. I think Indonesia positioning itself as the OPEC of nickel, but I think the minister recently announced the need to be proportionate between industrial products and raw materials, so both industry and miners can benefit and maximize profits for both sets. I think possibly the knock-on effect for other producers, potentially like yourself, could be very, very positive. Indeed, we shall see how that plays out. But I think with China,
they've announced that they're considering kind of a price floor, so 18,000. I mean, they've come out publicly and said that, so that gives you a little bit of insight into how they're thinking about ensuring that they not only maintain the market share but also maintain a pricing that makes sure those things are continuing to generate money for the fiscus, which is has been critical to the Indonesian government.
Yeah, and I think it's also been interesting. China are importing in from the Philippines up 8% of global supply in Philippines. So having to top up with ore from the Philippines is interesting as well. Okay, let's not get too drawn into that. I just wanted to talk about the kind of Tanzania factor, right? I've worked in 25 countries in Africa. You moved your family there and you've worked there. For those who perhaps don't know Africa and don't understand the ability to do business in Africa, can you talk about Tanzania?
Yeah, Tanzania, and I've lived in some really challenging African countries. I mean, Tanzania to me has really been really surprisingly positive. What I see in Tanzania is you have this really diverse country, mercantilistic, very trader oriented, and right now they've gone through what is a difficult chapter in the previous from the previous president, where he took a hard stance on the mining industry. And now you've had President Hassan come in, and she's pursued an investor friendly agenda. I mean, she announced a few months ago a tax working group, a presidential appointed tax working group with a whole series of industry experts to sit down and say, okay, how can we make the mining industry and the tax structure in Tanzania more friendly for investors? She's really opened up to the international community. She's the first female president. She's the first Muslim. She's the first Zanzibarian president. So she's got a great story. She has really to the international community opened a brand new chapter in Tanzania, and you're seeing the benefits of that. And I think the BHP decision to come back into Africa and decide to come into Tanzania in this project specifically is also a huge endorsement for Tanzania and their policies, because I can tell you BHP did an enormous amount of work on Tanzania before they made the first commitment. And so, I think they have an established mining industry. You have the Barracks, you have the Anglos that have been operating there for decades. So you do have an established mining industry, and the commitment Tanzania has made to this infrastructure is going to unlock all these other stranded ore bodies that didn't have the infrastructure there to make their projects viable. So you're going to see this continued positive knock-on effect of the commitment they've made to building out infrastructure across the country, and the mining industry is well on that path. So so I think Tanzania is one of these countries it's really on an upswing, and I think we're in there at the right time.
Yeah, I think it's always, I've done business there as well. It's sort of interesting, that kind of the whole Christian Muslim dynamic. Everyone seems to get on in politics and in life as well. It's a great country. Zanzibar is not too shabby either.
That is one of the things that I noticed in the country the most is that Muslim Christian dynamic, and like that Nyerere Marxism kind of belief that, okay, it's compatible with this policy, so everyone get along. It doesn't matter
Absolutely.
religion. That and it you don't see it in a lot of places in the world, but in Tanzania, everyone is in the same neighborhood, same areas, and incredibly diverse, but incredibly well functioning. So
Really
it's
stood out. Really
something
stood
to
out.
see. Yeah,
It's. I'm jealous. Um, right. So, well, look. I think that's been a good romp through as a kind of first introduction to the company, and you've also got some near term deliverables. Do they equate to near term catalysts for the share price?
yeah, definitely. So where we are, we have obviously there are expectations in the market that we'll be announcing the DFS very soon. That will then so the DFS is a very big catalyst. That leads to the BHP option, which is going to be another very big catalyst. And then we have the announced offtake engagements that we have, where we've given one indication of the market. The MOU with Jogmec should give an indication of that is advancing quite well. So we see those three catalysts on the horizon, which are going to be really the big ones for us and big one for the share price.
Chris, appreciate your time today. Stay in touch. Let us know how you get on.
Excellent. All right. Thanks for your time as well.